Hello, I hope you guys are doing well. I'm Adnan Rahman, your market analyst from Erante. In this video, I'll be explaining you each and everything what happened yesterday and overall what is the macro picture. So I need a couple of minutes of your precious time, hardly 10 minutes, and I'll explain you each and everything. Okay. Once you have a brief view of that, you can do your fundamental and technical analysis in a very proper way. So without wasting any time, let me start. Okay, this is a risk disclaimer. You can go through it while, you can pause the video and you can go through it later on. Okay, now what happened, yesterday was that we had this US CPI news yesterday. Okay, we had this US CPI news yesterday and it was a mixed bag. Okay, I have used the word mixed bag and there is a reason for it and I'll explain you as we go through the line. Okay, it was a mixed bag. Why? Because the print was cooler than expected. It was a mixed one and cooler than expected. Why? Let me explain you. The headline inflation, okay, inflation was more than expected. Okay, on the other hand, the core inflation, that is what Fed likes to see, a part of PC inflation, that was moving towards the downside. Okay, so now itself this is a mixed picture and that's why I use the word mixed bag. And now I'll explain this mixed bag further when we'll come into this interest rate or interest rate hike or cut scenario. Then you will understand this word properly, why I have used this word over here. Okay, and then the recent strength in the US was due to the NFP. Don't forget that NFP print was very strong. And then the yields, that is mostly the traders watch, yields were hovering around the 14-month high. So this was one of the reasons, the strength in the USD. And now yesterday we had this mixed type of scenario. And you know one thing, when there is an uncertainty in the market, at that time USD is the one who takes the benefit. Okay, USD and gold. So they play their times, give or take. So what happened over here is that the CPI print, the CPI print was, I could call it a mixed bag scenario. Okay, then after that, now let me take you toward this Fed watch tool. What is Fed watch tool saying us? And what it says usually is about the interest rate forecast, or is the interest rate going to be hiked or lowered or towards the hold side. Okay, now there are two prospects, okay, over here. Now there are two prospects over here. One school of thought, or the Federal Reserve or the CME tool, is saying that they will go for cuts. Okay, and the other one is saying the traders like you or me, what they are saying is, what they are expecting is to go into a hold scenario. And I'll explain you these two things right now with facts. Okay, now let me explain you. What do we know from the Fed watch tool is that there can be 2 rate cuts by the year end. Now keep these things in your mind, or you can just take a screenshot or watch the video again later. Okay, there can be 2 rate cuts down the line in the year end. Okay, and this was compared to just 1 rate cut that was suggested or forecasted before the CPI release. Okay, we had the CPI release. Before the CPI release, there was only 1 rate cut forecasted, and now they are saying that they can go for 2 rate cuts. Okay, keep this word in your mind. Okay, this is something I really need to explain you further. You will have a brief view of what I'm saying. So now what they are saying is, they are saying 2 rate cuts, and then earlier it was 1 was projected, and then now traders, now let's come to what traders, guys like me and you who go in for trading, they are looking for a wait and watch approach. Okay, wait and watch approach means a hold scenario. I'll take you to the next chart and you can understand it very well. And now when we come to Wells Fargo, what they are saying, they are expecting Fed to deliver 25 basis points of rate cut. So 25 is equal to 50 BP, basis point of a rate cut. Okay, 1 in September and 1 in December. Okay, so now what do we have over here? The CME is saying for 2 rate cuts. Okay, Well is saying for 2 rate cuts. Okay, and traders are going for hold. See, now that's why I use this word mixed bag over here, because the CPI print was giving us a mixed picture due to this 2 components. One was up and the other was down. Okay, I hope you understand this much, whatever I said you. Now let me take you one step further, what FOMC is saying. Okay, By FOMC, I mean the federal, the members of Federal Reserve over here. So now we have three members. One is Bakken, the second one is Williams, and the third one is Goolsbee. Okay, don't need to look at whole of these names, the big ones. Even I don't look at, so don't need to do. Okay, now what we need to see is, that Bakken, he is saying that the inflation is easing towards 2%. Okay, inflation is easing towards 2%. Let me write this over here that you can understand it. Okay, inflation is easing towards 2%. And the other guy, William is saying that I will be data dependent. Okay, when Federal Reserve or any member uses the word data dependent, it means that, okay, as soon as the data is out, whatsoever is printed in the data, according to that, they will take their further decisions. Okay, this is what they mean. So over here, this guy over here, according to him, it's just like a mixed approach over here. But what he's saying is, according to him, the growth projections are towards the upside. That's a good news. And then he's saying that there is stable unemployment around 4 and 4.25%. The unemployment is stable around 4 and 4.25%. Now you might be wondering that, sir, why is 4 and 4.25% okay in the green line? I'll explain you why. Like if you go to the previous historical analysis of this jobs data in terms of unemployment rate, you can see, as you know, the recession always occurred when the unemployment rate, it crossed the 5.5% or 6% threshold. So this was the historical analysis. So right now what we can see is that it's on 4.25. So we can give it a plus sign over here as well. So what is happening? Your inflation is going down according to this guy. Okay, and this guy is saying I'll be data dependent. And the other guy is saying, okay, the GDP is up and unemployment rate is down. So whenever you have your inflation down and GDP up, this is good for your economy. Okay, this is good for your economy. That's what I explained you when I was explaining the stagflation type of stuff. So this is a mixed picture from this guy as well, all these three guys as well. Okay, and then we have this Goolsbee. What is Goolsbee saying? He's saying that we have been achieving our 2% target over the 6-month period. So in short, inflation is going down and your GDP is going up. Okay, so when inflation is going down and GDP is going up, that means you can go for a rate cut type of stuff. So what I'm trying to say is now is that some of the federal members or this Fed members, they are expecting that inflation is going down, so we can go for a rate cut. Okay, some of them are saying that we want more evidence. Okay, like we want more evidence. This guy over here, he's saying I want more evidence, then I'll go for a vote for a rate cut. In all of this scenario, this is the scenario. In all of this scenario, the traders, okay, traders are saying, man, we will be certain. Until unless we are certain, we will go into hold scenario. Okay, they're going into hold scenario. Now let me explain you. This is the chart of a schedule of the Federal Reserve. You can see the expectations are that it will remain in this 3.9 or 4% on 4 threshold or in the 4 line. And what is expected? The move is like overall it's in a hold scenario. So that is why I have used the word mixed bag over here. So now you can look that if you are a Federal Reserve member, you can go for a rate cut kind of stuff, or if you're a trader, you will be looking, or the polls are suggesting that they will go in a hold scenario. So in both of these cases, in both of these uncertain cases, who is the winner or who is the beneficiary? It's obviously in the period of uncertainty, it's the USD that will take the benefit. Okay, so this was the main thing you need to keep in mind. And then we had this news from Bank of Japan. The governor and the deputy governor, they were in the view that they can see rate hikes in the coming week. And when you have a rate hike, your economy or the currency goes into a temporary strength. That is what we have seen in the charts as well, especially with the GBP charts as well. Okay, and Canadian charts as well. So keep this in mind. Any price action or any strategy in which you can have a strength in JPY, please do consider it. Okay, and now yesterday we had this UK CPI as well. It was again a miss, okay, below the previous reading. It was a miss one. And the possible rate cut is like, it's possible for a rate cut in February. And keep in mind that the CT Okay, Citibank already projected or forecasted multiple rate cuts for this 2025. Okay, so these were the updates for now, and now I'll have a brief view of overall fundamentals of what is happening in the US, okay, and on the other countries as well. That will be coming in the next video because this video is getting longer. So what I'm trying to say is now that the Federal Reserve or the Fed may go into a hold scenario, a hawkish hold. It means it is hawkish, or and plus a hold scenario that can give a temporary strength to USD. Okay, and on the other hand, the other economies like Euro is facing troubles. JPY is going into a rate hike. Okay, that is what you have seen. GBP is going into rate cut, multiple rate cuts. Same goes for NZD and same goes for Australian dollar. So you can see now it's JPY that is going towards a rate hike, and it's only one central bank that is going for a hold scenario, that is the USD, and it will take benefit from it. Okay, this is for now. Let me get back to you with other fundamentals and something very important regarding the oil market and what's happening in that. Stay tuned for that. Thank you. Have a good day.